The United States government passed more than $3 trillion of stimulus through two separate bills in 2020. The relief included a series of measures to keep Americans' budgets and the economy afloat. The efforts included increased unemployment benefits, loans to small businesses, and of course, cash directly to people's bank accounts. But how do American efforts stack up versus other countries? Are other governments giving their citizens more support during the pandemic?
For households, the big element, of course, was the stimulus payments that came out in the subsequent months at $1,200 for individuals, $2,400 for families, is limited for higher income earners, as well as some payments for dependents. In addition to that, unemployment insurance benefits were bolstered a bit. Of course, you have that $600 additional payment that came out every week from the federal government.
The effectiveness of the relief measures is still unfolding, but early indicators seem positive.
We actually saw median incomes rise in April and May in response to the legislation as folks got that stimulus payment and got the increased unemployment insurance benefits into their savings. And of course, savings went up. So we actually saw an increase in income, which is sort of counterintuitive when you think about where the direction it should be going during a recession and a pandemic.
Congress followed up March's CARES Act with a $900 billion bill in December that extended unemployment benefits and offered significantly less money in direct payments.
We recognize that it's not a lot of money. We were certainly hoping that the stimulus check would have been larger. $1,200 is significantly bigger than $600 and would have helped many who continue to struggle right now.
A study by Bruegal, a global economic think tank, did not find any other major countries that offered a direct one-time stimulus payment to citizens, making the response an oddity.
The main positive side or aspect of the US response, in my view, that it was very sizable. So one of the largest in the world in terms of actual immediate cash payouts to the economy.
Bruegal's divides stimulus spending into three categories: providing liquidity and guarantees, offering deferrals, and immediate cash infusions. The U.S. heavily favored direct stimulus, while most other countries opted to provide guarantees on people's incomes and new loans issued to companies.
Much more emphasis was made on increasing unemployment benefits, and also a lot of emphasis was made on this cash payouts to all individuals and their children under a certain income threshold, irrespective whether people need it or not. So the main element of the European labor market was employment protection schemes, which provided wage support to companies which companies suffered from large losses in revenues, and which companies would have otherwise laid off their workers. But instead of laying off, the government provided, in most countries, approximately 80% of the wage bill under the condition that the employees don't work.
France guaranteed 70% of workers' wages if they face shutdowns or reduced hours. In the UK, the government guaranteed 80% of wages up to about $3,000 per month. In Australia, workers were paid about $2,000 per month if they worked at a company that lost more than 30% of its revenue. In Canada, for workers who had their hours reduced by more than 50%, the government offered about $1,500 per month in support.
While in Europe, in comparison, the employment protection schemes especially targeted those who would have lost their jobs without such support. And the European support, in my view, was much more effective in stabilizing the labor market and giving those families who were in need the needed income to continue to survive and live from one day to the next.
Invest in you. Ready, set, grow. CNBC and Acorns.